Today we're going to dive into some high-interest cash ETF in Canada. If you're a Canadian resident looking for somewhere to park your money in either Canadian dollar or US dollar, this is the video for you. To be able to be qualified in this video, the ETF must be listed in a Canadian stock exchange, making it easy for Canadians to buy and sell. And number two, the fund must invest in stable, low volatility asset. Okay, so the price of the ETF cannot be fluctuating too much. Number three, this is not high dividend yield ETFs, right? These are cash generating ETFs. And number four, there's no medium or long-term bond ETFs. Okay, as the medium to long-term bond ETF, their price fluctuate a lot with the interest rate change, and of course the price in the secondary market. Those ETFs are pretty volatile compared to what we are looking for today. And the last one is that the investment must be liquid. Pretty much sellable during market hours is a must. Okay, so this way you do not have your money locked away from you. So who are these ETFs for? Okay, these ETFs are for people who need cash in the short term, typically under 3 years. Let's say you want to buy a house, you need a down payment within 3 years. I think it's a good place to park your money. And this is also for investors who hoard cash as a cushion in their portfolio. For example, Warren Buffett usually have 30% of their portfolio being cash for Berkshire Hathaway. Right now, he actually have 50% in Berkshire Hathaway as cash. Okay, cash is a great cushion. Some people say cash is king, right? When there's volatility in the broader market, having cash is like having a bullet. You're able to deploy it in the market at a cheaper price. And these ETFs are also for individuals who prefer low-risk, stable investments. And these ETFs are also for people who cannot tolerate volatility. Okay, like I said, to be qualified in this video, these ETFs should not be volatile. Okay, so the next question is why am I not recommending Treasury bond ETFs? Well, the bond ETFs are traditional fixed income ETFs. Most of them fluctuate a lot in price because they invest in the bond they invest in trades on secondary market. So their price in the secondary market moves a lot. But there's an exception, okay? For ultra low or ultra short duration bond like 0 to 3 month T-bills, in contrast, most of those ETFs are not volatile because of how short those bond durations are, so their value remains stable. So why don't I recommend GIC? Well, GIC stands for Guaranteed Investment Certificate. The problem with those is even though they do offer competitive interest rate, but they lack liquidity. Okay, your money is literally locked into those for a fixed term. So unlike cash ETFs, which can be sold anytime during the market hours. Okay, so how do those cash ETFs achieve high yield? These ETFs invest in high interest bank deposit accounts offered towards institutional clients like ETFs. So these accounts provide better rates than the retail's savings account. For example, at TD, right now your money probably are getting 0.05% on a savings account. Meanwhile, these cash ETFs can give you somewhere about 3% to 4% annual interest rate. So there's a huge difference there. And retail investors cannot get these high interest rate in the banks. Okay. One thing to note for these cash ETFs is that their rate will fluctuate. Okay. The rate you're seeing today probably won't be the same rate a year later because they are heavily influenced by the central bank's monetary policy or central bank's policy rate, meaning that the yield will likely to go lower because we're currently in a rate cut cycle. But the good thing on the bright side, the inflation is also projected to continue to go lower. Now let's take a look at these 6 ETFs. The first one is Global X High Interest Savings ETF with the ticker symbol CASH. Okay, the asset under management is ranked number 1 in its class in Canada, currently managing $5.7 billion. The ETF is pretty young. The inception date was November 1st, 2021. The price range is pretty stable at $50. As you can see, this is pretty much since inception, and the price is pretty much, the peak is at 50.21, and the trough is just around 50. So very stable pricing. And the yield, the net yield of the ETF currently is at 3.26%. And this one gives you a monthly payment. And these payments are not called dividends. Okay, for cash ETFs, these payments are called distributions. They're kind of like the interest payment you're collecting from your savings account at a bank. Okay, and the management fee for this ETF is at 0.11%. Okay, the next one is a purpose high interest savings ETF, and the ticker symbol is PSA. The asset under management is ranked number 2, managing $4.6 billion. The price range is very stable, around $50 as well. The peak of the thing is around 50.21. Okay, the trough is around 50. The yield, the net yield for the ETF is 3.17%. It pays a monthly distribution, and the monthly fee is 0.15%. Number 3, we have Global X Cash Maximizer. The ticker symbol is HSAV. So this ETF has an asset under management of $1.9 billion and was launched on February 5th, 2020. You might wonder, why does Global X, this is the second one I mentioned, right? Why does Global X have 2 Canadian dollar cash ETF in this category? Well, the difference lies between how they handle the distributions. Okay, so for this one, HSAV, it's unique because it does not pay distributions. Okay, so no interest payment paying to you. Instead, it's reinvesting its income back into the fund. As a result, the ETF's price steadily increased over time, as you can see, right? Steadily increase, making it an excellent option for people who prefer capital gain appreciation over the regular payout. This setup provides a tax advantage. Okay, since no distribution is paid out to you, you don't incur income tax. Instead, the profit is treated as capital gains, which means only 50% of the gain is taxed at your marginal tax rate. When you sell it in a taxable account. Okay, so HSAV's yield is represented in gross yield, which is an estimated return before the fee, okay, as opposed to after the fee in the net yield, right? This is gross yield, so it's gonna sound a little bit higher. So the latest reported gross yield is at 3.63%. This fund have a management fee of 0.2%, and this ETF is a great choice if you're looking for long-term tax-efficient growth. Okay, this tax efficiency have a caveat. I'm assuming you cannot put this in your tax savings account. If you put cash ETFs in your tax savings account, you don't have this problem. And number 4, we're going to go into a different subset of the cash ETFs, which are US dollar denominated ETFs. So number 4, we have this one called the Purpose US Cash Fund ETF with a ticker symbol PSU.U. This is the top ranking US dollar denominated cash ETF in Canada. Right? Again, listed in Canada, with asset under management of $841 million US dollars. The ETF's price is very stable. Again, the 5-year chart, as you can see, pretty much around $100. The peak is like 4 cents over $100. Okay, very stable, and it offers a net yield of 4.68%. Okay, 4.68, very attractive, and the distribution is distributed monthly. The management fee is at 0.15%. It's worth noting that the U.S. policy rate from the Federal Reserve, their central bank, is currently higher than Canada's, which allow U.S. denominated cash ETF to be able to deliver higher yields. Next one on the list, we have Evolve U.S. High Interest Savings Account Fund, and the ticker symbol is HISU.U. It's another US dollar denominated cash ETF. In Canada, whenever you see a ETF ticker symbol ends with .u, that means it's in US dollars. Okay, even though it's listed in Canada, it's in US dollars. This fund is relatively young, launched in August 2022 with asset under management of 714 million US dollars. Its price also very steady. Again, as you can see, around $100, and it provides a net yield of 4.23%, distributed monthly, and the total management fee for this fund is currently at 0.16%. Number 6, we have a special one called the Global X 123 or 1-3 month US T-bill ETF with the ticker symbol UBIL.U. Another US dollar denominated ETF, cash ETF, but this one is achieving this high yield by investing in 0 to 3 month US Treasury bills. Okay, and the fund is very young. The inception date is April 12th of 2023, pretty much a year ago, and the fund has asset under management around 402 million US dollars. The net yield of the fund is at 4.68%, and the distribution is distributed monthly. The total management fee is 0.13%. Like I said, the bonds, if they're midterm, long-term, they're going to fluctuate a lot. But for ultra short-term, like 0 to 3 months, they don't fluctuate that much because the duration is too short. As you can see, the history of the price action is very stable around $50. These are all the funds that I want to go over with you today. But before I let you go, I do want to talk about taxation. Okay, how much you're being taxed. Okay. Again, the payment you're getting are called distributions from these cash ETFs. These distributions are 100% taxable and counted towards your marginal tax rate. Unlike dividends, okay, dividends gets benefits from and like tax advantages and like for example dividend tax credit or whatever, but for these distributions you don't get any tax advantages. Okay, and these distributions are taxed similarly to interest incomes you get from savings account at a bank. To minimize tax implications, consider investing these cash ETFs through registered accounts such as a tax-free savings account, TFSA, or registered retirement savings plan, RRSP, in Canada. So if you can buy this, but if you have to buy this in a taxable account, you can consider funds such as HSAV, where they do not make distributions. Instead, they reinvest the interest back into the fund. But when you sell the fund, you have to pay for capital appreciation, okay, capital gain tax. But it's more favorable than paying 100% taxable distributions. Okay, let's talk about the risks. Okay, so cash ETFs in Canada are typically considered low to very low risk investments, focusing on short-term, high-quality instrument like the deposit accounts at the major banks or treasury bills. However, unlike putting your money into a bank savings account yourself, putting money into cash ETFs are not protected by CDIC, or Canada Deposit Insurance Corporation. Okay, CDIC is able to safeguard bank deposits up to $100,000 per eligible account, but you don't get this from cash ETFs. Okay, so if the fund issuer faces insolvency or operational issues, or for some reason the underlying asset, maybe the bank they're working with disappeared or whatever, the investors are not covered by any insurance, okay, and your money could be lost. Okay, so to mitigate this risk, okay, diversify your investment across multiple ETF issuers and choose products from only the reputable providers to further ensure security. Okay, and to simplify your decision making, I have converted a summary table with all the funds I discussed in this video. Please take a look. If you need to pause, go ahead. And this table includes all the key details for you for your easy comparison. Hopefully it's a helpful video. If you like this kind of content, please don't forget to like and subscribe. I'll see you in the next one.